Hi everybody and welcome back to the channel. We're just starting to see some green shoots in the Australian economy and businesses are slowly starting to reopen during the recovery period. Today, together with my colleague Dean Marinac, we're going to do a deep dive into staying profitable and maintaining your cash flow through the recovery period that we're experiencing right now. Stay with me. Hi Dean, welcome back to the channel. Today we're going to be talking about cash flow in a crisis.
Very important topic.
Subject at the moment, and something we should all be very focused on.
Absolutely. I mean, at the end of the day, cash is king, as they keep saying, and it's never been more important than right now to make sure that we keep a really good, tight handle on, what we have in terms of resources to get through this difficult period.
Too true.
So, David, I mean, you work with a lot of business clients, a lot of different types of businesses and industries and so forth. And as we keep hearing, in the media and also based on feedback we're receiving, there are a lot of impacts occurring out there. Businesses are shutting down, businesses are really struggling. Some are actually doing okay and some are trading through. So I guess, for some of these businesses, they've got a few things right. And if we look at the cash flow side of the business, what are some of the important considerations, I guess, in managing this cash flow in a crisis like this?
Yeah, Dean, there's a few basics there. Probably one of the most important one is to make sure that you're not actually squandering the existing cash resources that you've got. These are pretty challenging times, and so it's important to preserve your cash. Make sure you're spending money only on things that absolutely need to be spent. Have a really clear idea in your mind every time you pull out the credit card or send a payment to someone about exactly what it is you're going to get from it. Mm-hmm. Now, it is important in these times to be really flexible in your business and to be able to use that word pivot at the moment and be ready to adapt and change the way that you're doing things. But it's also important that you're not outlaying big sums of money on projects that you are unlikely to get a quick repayment from.
Right. So this is about prioritizing.
Precisely. Yeah, that's right. But there are other things that are important as well. And one of them is to keep open your lines of communication with your bank. Mm-hmm. At the moment, banks are pretty much throwing money at people. They've got underwriting from the Commonwealth government to be able to make unsecured loans in many cases. Mm-hmm. They're readily extending overdrafts. Mm-hmm. Australian banks have really come to the party, and hate them as we might. Now is their opportunity to shine, and many of them are. But in addition to banks, you've also got to look at your other source of funding, which is your debtors, people who owe you money. It's critically important to stay on top of them. Make sure you stick with your rules. Don't go burning bridges with your customers and your clients, but make sure that people pay for the services and products that you're delivering and make sure that they pay on time. Try not to become a free credit card for your customers.
Well, this might be a good opportunity here, I guess, to just also, use the current circumstance that a business is in to review their entire trading terms as well.
That's exactly right. Yeah. Trading terms are really critical to any business. The number of days that it takes you to get paid and the number of days that it takes you to pay your suppliers very much dictate your day-to-day cash flow. Mm-hmm. So it's a good opportunity to revisit those things and either change them or just as often go back and say, hang on a minute, we haven't been sticking to our plan. We haven't been sticking to these rules. Now's time to tighten up.
And I think you've touched on a really important point here, and that is to get a really good handle on what your entire cash cycle is, because you've talked a little bit about cash outflows in terms of, prioritizing the payments that we need to make and also the cash inflows. So there is typically going to be a time period between both of those types of transactions, and the duration of those combined means that you really do need to make sure that you've got cash reserves to cover that time period. Is that fair to say?
That's absolutely true. And the other thing is that many businesses in commercial rental properties, need to have the guts and courage to go to their landlords and say to them, look, there is a mandatory code in Australia for businesses that are struggling, and the burden of COVID-19 needs to be shared both between tenants and landlords. I've come across a couple of clients who have had landlords who just seem to live in this fairyland and think that everything is going to be exactly the same, and they will not entertain for a moment of giving them a cut. But for those tenants, they actually need to have the ability to stand up to the landlords and say, look, there is a code, it's mandatory, you must perform. And we've helped a few clients write those letters and make those approaches.
So, I mean, obviously, for a lot of business owners, rent is one of the key costs, and probably one of the biggest chunks of expenditure in the business. So obviously, anything that we can do to, reduce the impact of that cost so that we can keep the wheels turning is important. So again, on the other side, another key chunk here is employee expenses. Now, the government obviously has come out with the JobKeeper program, which
that's right.
I'm assuming that a lot of your listeners would be familiar with and hopefully eligible to receive. So let's turn our attention a little bit to some of these government programs that can assist us with managing our cash flow.
There are three that are very important, and there's a whole universe of others that are out there that are not quite as relevant to most people, like payroll tax concessions and land tax and the like. But the big three are JobKeeper, the cash flow boost, and the one that's a little bit indirect, which is the federal government underwriting banks to make working capital loans to private businesses. That one can't be underestimated. The JobKeeper program is already up and running, and don't I know it, because I've had almost no sleep in the last 10 days, making sure everybody is registered and getting it. The payments are now rolling out. I think more than half of them have gone out. Many people will already have had them. Some businesses hadn't quite hit the downturn phase in March and April, but we've got them on wait list to have a look again at things in May, because they may suddenly become eligible. And the way JobKeeper works is that once you're in the system, you stay in the system. So it's important to get in the first month that you possibly can. There's also the cash flow boost program. That's pretty much hands off. It just happens automatically, and that reduces the amount of PAYG withholding that you normally need to make in your regular BAS cycle. So those are essentially the three critical government programs that are operating at the moment. And for the most part in this country, they seem to be operating pretty well, certainly by comparison with the US and the UK.
Okay, so I guess with everything that's on offer, is as far as the government stimulus packages and also what we've covered so far, I just want to reinforce your very, very first point about making sure that just because suddenly you've got some cash sitting in your bank account, that you really don't be tempted to go and squander it or buy that new jet ski or something like that, but rather start looking at constructing a cash flow forecast, a budget to really ride out this period as we start to come out and start to rebuild our businesses from scratch.
That's right. So, that's right. And there are two major tools that businesses can use to improve their cash flow situation and give them a little bit of peace of mind that in 1 month, 3 months, 6 months, they're still going to be around and in business and able to put food on the table. And those two key tools are understanding your break-even point and having a proper cash flow forecast. So I'll just touch firstly on a break-even point. And this is something that some businesses, they know the term, they don't really understand it. And it's certainly something they've never calculated, but it's an incredibly powerful tool. And it's really easy to just work out almost on the back of an envelope. So briefly, a break-even point is the amount of sales or the amount of revenue that you need to come in the door that will cover all of your fixed costs.
Mm-hmm.
And that just gets you to the point where the business is not making a profit, but it's not making a loss. It's kind of that balancing point. And the general idea behind it is that if your business is operating at a below break-even point, you need to start asking the question, why are you even operating at all? Sometimes it's because it's going to be the expectation that things will improve, but you need to have a clear plan for that improvement.
And I think this is an important point. Sorry to interrupt, but I think this is a really, really important point for your listeners to take away from this, is that, you know, with everything that's occurred in the marketplace, the market conditions have changed. So therefore, the requirement for making sure that, you know, your business can generate that revenue is still possible. Because in a lot of cases, you know, markets are completely contracted now and will take some time to reopen. Now, how long can you sustain this break-even point for?
Yeah, and that's a critical question, and that's where having a proper cash flow forecast comes into play. And again, cash flow forecasts, some people sort of feel that they've got a general idea what a cash flow forecast is, but they haven't quite fully gripped about why you actually have one. It's deceptively simple. The point of a cash flow forecast, oddly enough, is not really to do prediction. And it's not a goal setting exercise. It's not like a budget. A cash flow forecast, it's a working tool, and it helps you generate ideas that lead to concrete actions, things that you can actually do, changes that you can actually make. These forecasts are designed to be manipulated. They are a model of the business, and they're like a machine. It has levers, and it will predict for you what will be the effect on your cash flow if you do certain things, if you take certain actions. So it needs to be a fairly precise kind of model. You can go totally overboard on the complexity of these things, but they need to be complex enough, but not so complex that they become unworkable.
But if you have your accounting package up to date, and obviously with all of your clients, I know that's what you do with your clients as well to make sure that they do, then it should be a reasonably straightforward exercise to construct this thing so that you can actually use it as, you know, as you put it, as a tool for proper decision making. So
that's exactly right.
Tell us a little bit about how we might use it to explore what could happen in our business.
Sure. Well, when you look at a cash flow forecast, it's got cash coming in, cash going out, what your bank account is going to be. But if you build it correctly, you can figure out things like what will be the difference to my cash flow if I change my trading terms. Right. So for some businesses, that might mean taking an upfront payment for services that they do. For others, it might mean paying your suppliers a little bit longer, hopefully still within trading terms. For others, it might mean what will be the effect on the cash flow if I change my pricing. And that's a big one that a lot of people just steer away from, mostly out of fear and anxiety of worrying their customers. But pricing is a critically important thing in cash flow. Absolutely. It can also help you predict things like what is going to happen to this business if we get a double dip on the shutdown. If, you know, 2 months from now, suddenly COVID-19 figures start shooting up again and the government start imposing more shutdown measures. The purpose of cash flow forecasts can be scenario setting. You know, what is the worst case scenario? What is a slightly better one? What is the most probable one? And what's a good one? If you can look at all those separate scenarios, then you can turn your mind to formulating a plan on how to deal with each one individually. What is the absolute worst case scenario? Here it is on the cash flow. I'm seeing this gigantic dip. What would I do? And the idea is you're thinking about this ahead of time, not when it all happens to you. You're thinking about, what will I do if things really go to hell with this business? Can I lay people off? Can I get further bank funding? Can I basically mothball the business? Can I get further support from the government? Can I get further support from from lenders? Can I get extended terms from suppliers? It gives you the opportunity to make that list and plan well ahead for the future.
So I know in a previous chat that we've had, David, we talked about, us answering the question, should we even reopen the business? I can see that obviously the cash flow, what if scenarios and sensitivity analysis, which it's also known as, is really, really critical in making the right decision at the right time. So if we look at a case study, so let's just look at an example of something that you've done with your clients and the effect that I guess having a cash flow in place has had on that business.
Yeah, okay. Well, a good example that I can think of is that we had some discussions with a podiatrist recently, in the allied health industry. People walk in, well, it's a podiatrist, so hopefully they walk in and they get their feet checked out. Now, obviously, because of COVID-19, he was getting a lot fewer people coming in the door. Doctors weren't referring their patients as frequently as they normally did, and doctors are a key feeder for this business. And people just simply didn't want to go out. So he found himself in the situation where the number of customers that were coming in was below his break-even point. We calculated his break-even point, and he wasn't making enough to cover the rent and his outgoings, let alone make an income for himself. We formulated a cash flow forecast. We had a look at what would change if the volume of customers changed. But critically for him, we also looked at what would happen to his business if we changed the level of his pricing. And again, this comes back to pricing being so critically important to business. Now, when you think about it, in a crisis like this, very often the only people coming into your business are the ones who are absolutely rusted on and really want to be there. These are the motivated buyers. So we had a look at his business and compared it to his competitors, and he was actually underpricing in the market. So I said to him, you need to have the courage to put up your prices. It's very unlikely that that's going to have a material difference to the absolute number of customers that you get through the door. It's not going to frighten them off because you're just coming up to meet the market. And when we did that, his total revenue shot up and he's now back at break even. He's not making a fortune and he's barely making a living, but he's surviving. And that's what's really critical at the moment. And you can only work these things out in the context of a proper cash flow forecast. We were able to do other things for him as well.
Sure.
For example, we were able to organise some extended bank funding for him. Of course, we did the natural ones like set up JobKeeper, but we were also able to help him out with his landlord, make sure that he was getting the full benefit of the new mandatory code there. So in the present climate, cash flow forecasts are a little bit more complex because there's more things going on. There are more variables going on, but they don't have to be incredibly complex. And it is something that business owners can do themselves, but it is definitely something that qualified accountants can help you build, help you create that model, because it has to be your model. It's something that a second pair of eyes on is critically important for.
Well, I think, you make a really important point here is that, first and foremost, from my point of view, cash flow previously may have been considered by a lot of businesses as a nice to have, as opposed to, what it is right now, which, if you ask me, is an absolute must have, whether it be for the next 3 months, 6 months, 12 months, the next 30 days we've talked about before. It's a critical tool to help you with your decision making. So, in looking at that, I guess, what final points would you give? Because, a cash flow, as you said, you can do it on your own. But the thing is, this is too important for it to be left to chance. And let's face it, you're the expert when it comes to the financial workings of not only your clients' businesses, but also the entire financial system that we work within as businesses. So if you ask me, it's a no-brainer to sit down with your accountant yourself and go through in detail a constructed cash flow for your business that you can really then drive and use to make the right decisions to keep your business going. Any final points on the importance of these cash flows?
That's absolutely right, Dean. Yeah, cash flow, like we can't emphasize how important cash flow forecasts are. And we're not the be all and end all. We're not God. We don't know everything. We can help you produce these things and get the most out of them, actually optimize the value that you get out of them. But you can do it on the back of an envelope.
Sure.
If you've got a big enough envelope.
Sure.
and enough time. But, you know, some plan is always better than no plan. And, you know, I keep saying over and over, never waste a good crisis. We have this crisis handed to us. We need to learn how to adapt. And now's a great opportunity to start making some changes in your business, not just for now, but for the rest of your business life. Change the way that you're doing things, learn to adapt, learn to improve, and take full advantage of the catastrophe that's befalling us right now.
And I guess as a final point, you know, now is the time that we can start to turn our attention to not only survival, but now recovery. So planning becomes an absolute major component of this. Cash flow is a part of that planning. So look forward to hearing more about those key areas that we need to start focusing on so that we can start to set the direction of where we need to get to.
Look forward to it. Thanks very much for coming on the show again, Dean.
Absolute pleasure.
I look forward to catching up with you again in a week or two.
Sounds great. All the best.
Thanks, Dean.
Cheers.
Well, thanks for staying with us today. I hope you enjoyed it. I certainly did. Remember to like and subscribe, and I'll see you in the next one.